Hello everybody. This video I'm going to talk about the final accounts. To prepare final accounts, we should know about the journal entries. Journal entries should be passed based on the accounting principles. The accounting principles can be the personal account, real account, and the nominal account. The personal account rule is debit the receiver, credit the giver. Real account rule is debit what comes in, credit what goes out. Nominal account rule is debit all expenses and losses and credit all income and gains. So based on this rule, the journal entry should be passed. Then from the journal entries, we have to prepare the list of accounts. From the list of accounts, we have to prepare the ledger accounts. And after opening the ledger accounts, we have to close the ledger accounts. Then from the ledger accounts, we have to prepare the trial balance. And the trial balance must tally. Debit is equal to credit. If it is tallying, then definitely the balance sheet will tally. If the balance sheet, if the trial balance is not tallying it, then we can show as a suspense account, but that suspense account must be rectified in the following financial year. Then from the trial balance, we can prepare the trading account, profit and loss account, and the balance sheet. The trading account, there are the debit side and credit side. The debit side, all the direct income will be listing it out, and credit side, all the direct income will be mentioning there. So direct expenses in the debit side and direct income in the credit side. Usually, in the trading account, the purchases will be coming the debit. Then all the what you can say that all the direct expenses will be listing it out like wages, octree, uh, then that means at the time of trading, what are the expenses will be placing it out. Those expenses we can bring it in the debit side. And the credit side, the sales will be coming it out, and any income like from insurance company, in case they are claiming some amount, that is the income. Those income will be coming it out. So this way we have to uh, prepare the trading account. Then after preparing the trading account, we have to close this account. If the balancing figure coming in the debit side, it is a gross profit. If the balancing figure coming in the credit side is a gross loss. This gross loss or gross profit should be carry forward to the uh, P&L account. So P&L account, there are the debit and credit. Debit side, it's are all the indirect expenses, and credit side, all the indirect income. So usually, the administrative expenses, selling and distribution expenses, okay, and like maybe the factory related expenses, which are all indirectly spent. Those expenses we can bring it in the P&L account, debit side. And the credit side, like any indirect income like rent received, commission received, dividend received, okay, and those income we can bring it in the credit side. Then we have to close the account, the P&L account. If that balancing figure coming in the debit side is a net profit. In case the balancing figure coming in the credit side, it's a net loss. Net loss or net profit should be adjusted in the capital account of the balance sheet. Now let me tell about the balance sheet. Balance sheets, there are the two sides. One is the liability side, another is the asset side. The liability side, usually the capital will be coming. The capital may be that in the form of the equity shares or preference shares. or maybe the general capital amount that the owner invested, those amount we have to mention there. Then we, in case the profit is there, we have to add the profit. In case any drawing is there, we have to deduct it. Any loss is there, that we have to deduct it. So these kind of adjustments we have to do it in the capital account. Then that medium term loans, okay, or maybe some long term loans, in case we have taken it from the financial institutions or from other outside, other than the other, that means companies, other than the companies, we are gaining money, we to get money from the outside, outsides, those amount we have to mention it there. And then apart from that one, that the short term liabilities like sundry creditors, outstanding expenses, bills payable, and all will be appearing in that liability side. Then, when you talk about the asset side, assets usually you can classify two types. One is at current assets. Second one is at fixed assets. Current assets are all the cash in hand, cash at bank, okay, bills receivable, or inventories. Okay, these are all the example of the current assets. Then the fixed asset like furnitures and pictures, land and building, in the loose tools, okay, goodwill, patent rights, copyrights. These are all is at fixed assets, and these assets will be appearing in that the fixed under the category of the fixed assets. Then we have to tally the balance sheet. There is a left side and right side. So if we follow the rules and regulations of the accounting very well, then definitely the balance sheet will be tallying it out. In case if it's not tallying it, then somewhere some mistakes had happened it in terms of accounting rules and regulations. So that should be rectify it. Once we rectify it, automatically the balance sheet will be tallying it out. The other name of the balance sheet is the financial positions. So this is some general ideas about the final accounts. So final accounts is very important to know the profit or loss of the business. Usually, this final accounts is prepared by the sole trade proprietors, and some small concerns can prepare it to know the profit or loss of the concern. Thank you so much.